Hi class. We're going to look at chapter 2 and it talks about the expanded tax formulas. And this basically gets into the idea of filing your taxes with either a 1040 or a 1040A tax form. And we'll start doing tax returns, and I will do actually videos that show you how to do the tax returns. So this is a good chapter that kind of gets you uh, doing some of the basics that you need throughout this semester. Okay, so tax returns, 1040A, 1040, they're more complex than the 1040Z, which we did in chapter 1. Also, um, one of the main numbers that we're looking for in a tax form is your adjusted gross income. Okay, so when you count up all of your gross income, you list all of the permitted deductions for AGI, not from AGI, that happens later on, but these are the deductions for AGI. You arrive at a figure called the adjusted gross income. And typically on 1040, which is the main form that we use, it's on line 37. That's the very bottom of the first page on the 1040 form. If you look at the expanded tax formula, okay, now that we have these other tax credits, we have some payments, refundabilities, um, the expanded tax formula looks like this. Now, the first homework question that we're going to deal with is the question of what are the 5 filing statuses? And this will require you to read the textbook or read your e-text and read carefully then how a taxpayer can either be single, married filing jointly, married filing separately, which is not used very often, the head of the household, and again, you need to understand the concept behind each one of these. And so, again, it's single, married filing jointly, married filing separately, head of household, or a qualifying widower. Those are the 5 different filing statuses. Okay, personal exemptions. We looked at this prior. They're available to the taxpayer and the spouse, and the exemption amount is $4,050 for 2016, and each year that gets adjusted. Now, how do you qualify to get an exemption for people other than yourself and your spouse? Well, you basically have a qualifying child, and there's 5 different tests that work through this, or you have a qualifying relative or a qualifying person that's not a relative but's been living as a member of your household. And again, I'm not going to go through all the details. These videos are just to help you understand how to do the homework. Okay, now here's one issue that comes up where we have a standard deduction for people who are claimed as dependents. And the standard deduction also will increase for people who are age 65 or older. So looking at this deduction, standard deduction for a dependent it's either the higher of 1,050 or the taxpayer's earned income plus $350. Okay, but cannot be over the standard deduction. So if it's a single person, it cannot be over $6,300. Now let's see how we're actually going to use this information. And I'll go back to it right here. Now here's the real meat of what we're talking about as far as doing the homework. Donald's 21-year-old full-time student. He earned, there's his earned income. And remember, that's different than income that comes from things like interest or dividends. His earned income is $2,500 for a part-time job. His interest income or not earned income is $1,150. If Donald is a dependent of his parents, so his parents are taking that $4,050 exemption, what is his standard deduction amount? If Donald supports himself, is not dependent. So first of all, what is it if he is a dependent? Okay, so just to look at how do we do this calculation, I'll come over here And if you look up at the formula bar, here's the $2,500 he had as earned income plus the $350. And so his deduction for being a dependent is $2,850. If he's not a dependent, then his standard deduction is simply $6,300 like any other person that is single. Okay, now we'll go back to the PowerPoint slides and we'll look at this standard deduction, which we saw in the first Chapter 1 homework video. Again, the standard deduction for single, married filing jointly, married filing separately, head of household, qualifying widower. By the way, qualifying widower means the year that the person's spouse dies and you have a dependent, okay? And so a dependent child or dependent child. So, and here is the other deduction you get, your exemption. Now, in addition to this, there's an additional standard deduction for if you're 65 or older, or if you're blind. Okay, and you get a certain amount for each one of those categories again. You can get either one for 65 or blind, or both. If you're 65 and blind, you can get both of them. Okay, so we'll go back to the problems that are in the homework. The next question gives you a series of situations. It says determine the amount of the standard deduction for each of the following situations. So we'll just start with Christina, who's single, no other information. She would get $6,300. Adrian and Carol filing a joint return, their son is blind. Okay, so let's take a look then at the different standard deductions. I did the answers for first of all, for A is 6,300. And now I'll flip back. C, Peter and Elizabeth, who are married and file separate tax returns, Elizabeth will itemize her deductions. Well, you can't have a standard deduction if your spouse files separately and itemizes. You must do the same thing they do. In other words, if she itemizes, you have to itemize. So that's why that's a 0. Okay, E is Rodolfo is over 65, so that would be 6,300 plus the extra. So if we look over here, click on it, it's 6,300 plus you get an additional $1,550 if you're single and you're over 65. Okay, and then finally the last one I believe is G, Manuel, 70, and Esther, who is 63 and blind. So they get the standard deduction. I'll go over they get the, notice up here on the formula bar, I'll show you the calculation. They get the standard deduction of $12,600, and then they get the 2 additional standard deductions for one being blind and one being 65 or older. Okay, now jumping ahead to the last of the homework questions. We have a determine the tax liability for the tax year of 2016 in each case. And remember that you use the tax table if it's under $100,000 and the tax rate schedule for taxable income over $100,000. All right, so the first one says a single taxpayer, not head of household, with AGI of $23,493, one independent. So the first thing we have to do is take whatever they have as their income, okay? In other words, this is their AGI, their adjusted gross income. And that means we have to deduct those 2 deductions, the standard deduction and the exemption. So we'll go over to the spreadsheet, click on this, and we take the $23,493, we subtract the standard deduction, we subtract 1 exemption for the taxpayer. It says he has 1 dependent. We subtract that. Our total taxable income then is $9,093. We go down the tax table. it shows our tax liability is $908. Now we look at single taxpayer, not head of household, AGI of 169,000, no dependents. Okay, so what makes this different is you're over $100,000. Okay, so first of all, how much is our taxable income? Well, they started off with 169,783. There's our standard deduction. Here's our one exemption. Our total taxable income is 159,433. Now, this is the part you haven't done before. You have to take the whatever the tax is. So I switched over to the tax schedule, and this person again is single, and they make 169,000, but their taxable income was 150 something. So I have to look at this amount right here. They fall within this range. So the formula when you use the tax schedule is this amount, 18,558.75 plus 28% over 91,150. What does that formula look like? It looks like this: 18,558 plus 28% over what the taxable income was. I just used a cell reference, minus 91,000. Okay, so that gives us a tax liability of $37,678, rounding off to the dollars. All right, now the last one I looked at real quickly, click over here, was number, I believe, G, qualifying widow, age 66 with AGI of 49,240 and one dependent. Okay, so looking at this, a qualifying widower has 49,240, gets a standard deduction of 12,600. Because of her age, she gets another 1,250. One exemption for herself, one for her dependent. This is the total amount of taxable income. Click on the tax table, and our tax liability is going to be $3,164. Okay, so there's a lot of these problems. They're the basic beginning to doing the tax calculation, and you just need to practice. And the